All right, we are just past the top of the hour. I'd like to welcome everyone to our webinar today on unlocking financial clarity for family offices using Sage Intacct. To kick things off today, I'll give a brief introduction on myself. I'm Megan Smith from Cross Country Consulting. I'll be moderating today's conversation. For those who don't know Cross Country very well, we are a business advisory firm with offices across the United States. And we focus on helping organizations transform their finance, their accounting, their operations, their risk functions, all using leading technologies, data, and AI. Sage Intacct is actually one of our key technology partnerships in our portfolio, supporting our clients. We are really proud to have been a Sage Intacct value-added reseller partner for the past 12 years now, and our dedicated practice has been helping family offices specifically over the past decade or so implement, optimize, and get the most out of Sage Intacct. So today's conversation is all about practical ways that family offices are modernizing their financial tech stack with Sage Intacct, moving from manual spreadsheet-heavy processes to having real-time visibility, automated consolidations, and a more integrated and connected technology ecosystem. A quick housekeeping note as we get started today. You are all listening in through your computer speakers or whatever earbuds you have in, and all attendees are muted by default. So if you do have questions, please use the chat or the Q&A feature. We do have time at the end of the conversation today to answer questions. And if we do run out of time, we're happy to follow up with you individually and make sure that we get your questions answered either by our team, by Sage, or by our team of panelists that we have today. So without further ado, let's meet our panelists. These folks joining us today bring a wealth of experience from their roles in family offices and at Sage Intacct. So today, joining us, we have Kelly Baines, a principal solutions consultant at Sage Intacct. We have Keith Varney, who's the CFO at a family office, Scott Holdings, LLC. And we have Kristen Brugos, who's a director of accounting and finance at Spyglass Capital. So to get us started, Kristen and Keith, why don't you each tell us a little bit about your role, about your family office, the size, the structure, and a little bit about what technology stack and your reporting process looked like before you implemented Sage Intacct. Kristen, I will start with you.
Hello, everyone. I'm Kristen Brugos. I am the Director of Accounting and Finance at Spyglass Capital. Spyglass is a single family office. We have locations in Dallas, Texas, and in the U.S. Virgin Islands. Spyglass has a large portfolio of investments made up of private equity, real estate, venture capital, and marketable securities. Between both our US and VI structures, we probably have around 70 entities, and we're adding more each year. We have both simple and complex structures. Our simple structures consist of like several LLCs rolling up 100% under a trust. And then we have more complex structures where we have an entity with multiple partners, and each of those partners owns an investment at a different percentage. So not the easiest, to deal with there. Before we implemented Sage Intacct, our tech stack was just QuickBooks. We didn't have an investment software. We were only using QuickBooks. That was on our US family side. Our Virgin Islands office was brand new when I started. So we were basically starting from the ground up. We started with QuickBooks just to have some type of reporting, and then we eventually implemented Sage Intacct.
Great. And Keith, on to you.
Yeah, hello everyone. I'm Keith Varney. I'm the CFO for Scott Holdings. We are based out of Boca Raton, Florida. It is a multi-generational single-family office. We have 9 employees, and like Kristen said, we have a lot of public equities, fixed income products, hedges, hedge funds, private alternative investments, private equities. So we've got a pretty robust stack of investments that we track. Before we went into Sage, we were using a single source solution product that was implemented in 2023. I came on board here during that time, and we noticed that a lot of the things that from an expectation standpoint weren't being met. So we elected, we were trying to work out the bugs, get things working the way they should. the biggest issue we had was, you've got three books of record in that system, which was the accounting book of record, the investment book of record, and the capital book of record. And if all three of those didn't talk to each other correctly, you would have an out of balance. And there was just so many workarounds that had to be done that it was just very inefficient and didn't meet expectations. So I made the choice to go out and try to find another product that would satisfy the requirements that the trustees and the principals wanted to see, kept them very involved in the process. And so we went out and did a couple of different sources and, made the decision that we wanted to go with Sage Intacct. We've been on it now. We went live at the beginning of this year. And all I can say is, we've been very pleased with the results so far.
Great. And Kelly, your role is a little bit different from being an employee at a family office. Tell us about your role at Sage Intacct and how you work with family offices.
Yeah. Yeah, I'm a solution consultant here at Sage Intacct. Really excited to participate in the webinar today. I work with family offices pretty regularly, ranging from single family offices to multifamily offices. My role is to really understand the accounting and reporting needs that family offices face and showcase how Sage can help them move their office from manual spreadsheet-driven processes to more modern platforms with Sage Intacct. And my goal is to make sure that each family office has a vision of what they'd like to use in our solution to meet their use case for their owners and for their family members, as well as maybe even operating businesses.
And from your experience, what would you say makes Sage Intacct particularly well suited for family offices?
Yeah, and to add what Kristen and Keith said, having a variety of entities and trusts and investments, there's specific reporting that needs to be given to stakeholders in that industry. And so what Sage Intacct does, because it is a multi-entity structure, has things like dimensional reporting. We can really help create efficiency to get that needed reporting and insight that companies need, as well as scale as you add entities and investments in the future.
Okay, great. So we want to start kind of some of the Q&A after introductions, rewinding to that decision to implement a new accounting system. And Keith, you touched on this a little bit just now, but when you were each building that business case for moving to Sage Intacct, what were the top goals or outcomes you prioritized, and how did you communicate the value of that transformation and taking on this project to your principals, your board members, or your family stakeholders? Keith, why don't I start with you? It's a little bit more recent for you.
Okay. Yes, glad to do that. So our decision was, really we just wanted to get basic reporting out of the system. The system we were in was designed to be able to give us the accounting records that we needed, plus the investment side. And they were supposed to be able to work with each other. And we just found that, like I said earlier, that we were just having a lot of issues and a lot of workarounds. There was no real solution that was being done to offset the time that we were putting into it. So what we really were looking for was get the accounting records out and be able to give the principals and the trustees proper reporting, because we do have a fiduciary responsibility to them. So that was our main goal. And then we also along with this, we actually implemented Sage and Adapar at the same time. And so we knew we were going to get the investment side, the investment reporting we needed from Adapar. And then the big decision was just getting into getting that communicated to the trustees. And so I put together just a memorandum. Honestly, our patriarch, he was in the office. He would ask me every day, "How are we doing? How are we doing?" So this wasn't a process where he just got an update occasionally. He was asking every day how we were progressing and what we were doing about it. So once the decision was made to recommend Sage Intacct, it was just really getting a communication out to the trustees that this was a decision we wanted to do. We gave him the solution, what it would solve, and we got their approval and we moved forward.
Great. Kristen, how did your journey differ when you were proposing that?
Yeah, so
transition?
our business case was a little bit different than Keith's. as I mentioned before, Spyglass was a brand new family office at the time. We did have our US family office, but we opened up a brand new office in the VI, so we needed to get reporting right away. We were using QuickBooks, and that was, very manual process. So when I was brought on, our CIO had already selected Adapar as our investment software, and his focus was on finding an accounting system that really worked with Adapar. So the decision was kind of made up already when I started. However, we still went through the process with Sage, to make sure it was the right fit. And then, the same as Keith, we implemented Adapar and Sage Intacct at the exact same time. And then we've also integrated the two systems via Knowledger. We started our Sage and Adapar implementation, I believe, in June of 2022. Adapar, I think we were finished within a few months. And then our first phase was Sage Intacct was November 1st, 2022. We expanded our scope with Sage Intacct and cross country. I think we finished full implementation at the end of 2023.
And then once you did make that decision, what other areas of transformation did you know at the time that you were going to need to be putting focus on during your project? Kristen, since you just wrapped up, we can kind of keep going with you.
Yeah, absolutely. So we had a few main areas that we were focusing on. The first one was rethinking our chart of accounts. Before we even started our implementation, I created a brand new chart of accounts, a uniform chart of accounts that would work across all of our entities. And in Sage, we had heard that, well, you can work at the top level. So we wanted to make sure that chart of accounts could work for every entity that we had. And then we had to think about how we wanted to leave growth within that. So when I created this, after we started our implementation with cross country, we sent them our chart of accounts, and they were able to revamp our chart of accounts to make it work with Sage Intacct. Another area was our financial reporting. We had several discussions with our senior management team and talk through our different types of financial reports that we needed and what the formal process was going to look like once we implemented. I think our biggest area of focus was cleaning up some of our historical data. So in QuickBooks, we had our individual entities for our patriarch and the son, and those were the two main people we reported to. However, all the entities that rolled up 100% to each of those individuals were in one instance of QuickBooks. So we had to think through how we were going to take those entities out of this one instance and put them into their own individual entities in Sage Intacct. And that was a pretty difficult process. We had to create journal entries, that were never there, intercompany transactions that never existed in order to get our equity to tie. So that was a big area we had to think around. And then also, lastly, like I said, we implemented Adapar and Sage at the same time. So we had to think about how we were getting that data from Adapar into Sage Intacct. We were using Knowledger, but we had to think about the different rules that needed to be created. And then how are we going to reconcile that data? So we had quite a bit to think about when implementing.
You did. I remember it well from our team. Keith, how about you? What did you know that you were going to need to be focused on in addition to kind of defining your module use?
For us, along the same lines as Kristen, I mean, we wanted a standardized chart of accounts that fit all of our entities, and we have quite a few, from individual accounts to business accounts to trust accounts. So we wanted to make sure that we had a robust chart of accounts that allowed for growth, that if we added more entities on, that the account ranges all fell where they needed to. It made it easy when we were adding companies or adding accounts that we knew where to add those. And, we're a single family office. So, a lot of our processes revolve around, accounts payable and intercompanies. And the intercompany process, as everybody knows, if you've used QuickBooks, it's a log in, log out type process into each company. The good thing with Sage is it's one login. You can access all the locations in one login and do the things you need. But our dimensional reporting was very key to us because we wanted to make sure we could separate out our assets, our investments, our customers, our vendors, our trust and principal accounts. And then we've even got it down because we do a lot with the member capital. So we actually have a member partner dimension that we can report on. So when we're doing the reporting to get all of the income from these entities rolled up to the correct ownership, we had everything in place. We had the use case built out to where we knew that when we run our reports and ran all the various closing processes that we had everything we needed were in the right place, and we were comfortable and confident in the reporting we were getting.
Great. Now, Kelly, I know your experience is probably similar to ours as of our partner at Sage Intacct, but from your perspective, when a family office first gets engaged with either a partner or with Sage Intacct, what else do you see of the top challenges that they're looking to solve for? Or in other words, what's kind of prompting them to finally raise their hand and say, like, we really need to get this figured out now. This is an initiative that we need to take on.
Yeah, and I think a lot of that comes down to growth and the efficiency of adding growth within their portfolio. Many family offices really do start in QuickBooks and Excel because it feels familiar and easy, but it becomes very painful when you're managing dozens of entities. And I've had clients who have over 100 entities that they're trying to manage in a QuickBooks world using Excel reporting. That can be very, very challenging. So as family offices grow, we enable them to add new entities, add their trusts, add their investments. And so definitely provide a lot of value there. And like Keith mentioned, intercompany transactions. I talk to a lot of people who are utterly amazed at the fact that they don't have to log in and out like a swivel chair experience into multiple QuickBooks instances to post similar transactions in different entities, and that it is a lot more seamless within the Sage Intacct structure. Having complex ownership structures, like Kristen mentioned, is something that takes a lot of effort, but being able to have reporting that you can isolate entity groupings and family office branches to give you that reporting and visibility you need is something that I think a lot of people really desire, and that it takes a lot of work to set it up in QuickBooks. So again, growth and efficiencies that we can bring is what really starts prompting people to look outside of what they're currently using today for better processes.
That's actually a perfect pivot to our next topic. I want to dive in a little bit deeper into how Sage Intacct is supporting you with that volume that you both have on the number of entities and honestly the range of investment complexities that you have that you both mentioned. So within each of your family offices, I'm curious, has the family entity structure evolved since you've gone live? And how has Sage Intacct helped maintain transparency across that expanding or stable if it hasn't changed much or there's no plans for it to change much, the entity structure and your trust structure? Keith, why don't we start with you?
Okay. Yeah, for us, I mean, we have, and I looked and had to go back and look because we just added some entities. We actually have 151 entities on the platform today, of which about 49 of those are either irrevocable or revocable trust, exempt, non-exempt, grantor, and non-grantor trust. And then we also have a few charitable lead annuity trusts. We have business accounts. We have personal accounts. We have 138 checking accounts on the platform today. So going through, what we've discussed, when you're doing that through Excel or QuickBooks, or if you don't have a robust system, it's a lot of manual processes, and it just leads to the possibility. I mean, we're all, we all can make errors. Trying to limit the risk of doing things manually as much as we can. So we found that, in going through the implementation and you start laying out the groundwork and the framework of what you're looking for, it's amazing how you realize, wow, I've got a lot of information that we're trying to get, in a system. And then from the capital side, the members equity side, that was a manual process. It was all done through Excel. And so we have saved so much time in this process of being able to come up with an allocation method of being able to take the owner's partnership to Kristen's point, with the complex ownership structures that are in place, and be able to get these results each month. And we've cut down significantly our time in our closing process. And we have really, when we've had our meetings, our trustees are just amazed at how well and how smooth the process seems to be.
Kristen, what about you? What else would you add around the ability to support the evolving entity structure?
Yeah, I can, echo a lot of the same things that Scott had said. We were in QuickBooks before, so as new entities added, the consolidations became more cumbersome, the elimination of the intercompany transactions. So Sage was really able to help us get rid of a lot of our spreadsheets for financial reporting. I won't say we were 100% there. I think Keith, they're a little more far along in their process when it comes to the advanced ownership allocations and stuff. So that's one thing we do need to work on. But for the most part, Sage Intacct has become like our single source of truth for financial data rather than having, tons of spreadsheets for all of our financial reporting.
Yeah, I think that's fair. And we're going to dive a little bit further in Keith's use case on how they're using the dynamic allocations in one of our later topics here in the hour. Kelly, what else would you add to this conversation of Intact being able to support the current stable environment of what family offices come with and the evolution that family offices often go through with adding entities and adding other investment complexities?
Yeah, absolutely. So, what's really, I think, important to note is that Sage Intacct is super flexible and configurable. So, as a family office comes to Sage Intacct, and maybe they don't have a lot of reporting nuances that they want to achieve because they're still kind of working through processes and what that use case and vision needs to look like, Sage Intacct can kind of meet them where their reporting is today, but then also help them scale that up in the future. And so, an example of that would be, say for example, we have 150 entities, like Keith mentioned, we have a lot of entities we're managing the system, and I want to group all of these trusts together into a dashboard or into a reporting set. We can actually add things like custom fields into the entity record so that we have the ability to filter and sort by that type of entity and make it a lot easier to see that visibility within the system. And so having the knowledge of the ability of the system to have all of that data, but being able to filter and sort it in a way that is important to you, obviously, is something that you can configure when you're ready for that change. There's a lot about change management that happens with organizations as they're switching accounting systems. It's not an easy process. And so we don't want to overwhelm anybody in changing accounting systems. So making sure that we understand, like, what are the priority initiatives now and what are they in the future, and how can we meet that future state with this system, knowing that not all of those changes happen to need to happen day one.
Yeah, I think that's a great point and kind of underlines, Kristen, what you brought up around you're still optimizing now, and that's going to be a little bit of a continued journey as you continue to improve the reporting process. Keith, back to your topic around your use of dynamic allocations. This might be a little bit of a two-part question. I want to dig in a little bit more around your current state of your investment reporting. You mentioned that it's a lot faster now, so I want to dig a little bit more into kind of what improvements you've seen on that. And I want to go into a little bit more detail if you can describe exactly how you're using Sage Intacct's dynamic allocations functionality to allocate that income from the owned entities back to its investors.
Okay. So to answer your first question, the investment reporting we're doing, again, we implemented Adapar at the same time. We elected not to go with Knowledger up front because we were implementing two systems. We were just coming out of a system that was giving us a lot of trouble, right? So I didn't want to overwhelm the team, and at the same time, they were a little bit hesitant about, okay, what's the next system going to do for us, right? Because we just came out of this one and we saw what it wouldn't do. So it was one of those, okay, let's take steps. Let's get the two systems implemented. We know what we're going to get with both systems. We knew from Sage's standpoint, we knew that we were going to able to utilize the reporting and the allocations to help us with our member capital accounts. And then also knowing that Adapar was going to do what Adapar does from the investment side. So from the allocation standpoint, we had a use case where we wanted to set up all of the ownerships for all of the various entities and what are those statistical accounts, which is the non-journal accounts. So for every, obviously, individual or business, everything that has an ownership to it has a percentage that is in the statistical account. And then we actually, with the help of the team at Cross Country, helped build out the dynamic allocation. And, there was some, obviously, it took some steps, right? Because we knew what we wanted, and then just communicating that. But I have to say that at the end of the day, everything that we asked for was done. Now, we had a few things where they would set up a dynamic allocation calculation, like a work in progress, because we wanted to see it laid out a certain way. And so you could create these user-defined books that you could go in and do the allocations. And then we have a final allocation book that takes all that work in progress and puts it into a way that when every entity's income for each month, income or loss, it gets allocated based on the percentage of ownership and goes directly to that owner, so that when you're pulling up any individual, you have like a look through to their ownership and what their basis is in each one of those entities. Now, we have some entities that are 100% owned. We have some that we have 5 or 6 investment portfolio companies that are made up of 7 or 8 other entities with various ownership. So there's no entity that we have that is the same ownership structure. I mean, other than if it's 100%. So it's not like it's one size fits all. We have multiple ownership structures. And so we're able to run a process at the end of the month. Once everything is done, we have 8 allocation groups, and they're basically allocated by the largest percentage. So we got companies that consolidate. Those companies have ownership into another entity that it consolidates, and then it ultimately gets to the top level. So when it gets to the top level, so we have 8 allocation groups that we run, and it's a very seamless process. Once everything's done, you run an allocation group, and it does the calculation and makes the necessary entries to record to the member capital accounts. And we, obviously, to Kristen's point, we're still doing some of this through Excel just as a check. I mean, we're 1 year into this, so we want to run some checks and balances. And we have found that, our balances are tying out to their balances, to what we're seeing coming out Sage. So it's been great.
Great. I love it. It's a great use case of that module. And Kelly, I know we spend a lot of time with you when we're solutioning for our customers. What other use cases do you see for that dynamic allocations functionality in the family office space? And then can you speak a little bit to the alternative solutions and ways that Sage Intacct customers solve for their partial ownership requirements?
For sure. Yeah. And so dynamic allocations actually is one of my most favorite solutions here at Sage. And I think of it as the way to build a formula without having to use Excel. And I am an Excel nerd by nature, just so everybody is aware of that. So I usually call the dynamic allocations tool our reclassification tool, or after the fact reclassification tool, because what its intended use is to take volumes of information that is on the GL, filter that, and then allocate it on a basis that either could be financially or statistically driven, like in Keith's case. And so for family offices that do manage sometimes for their investment, timeline, they might be managing a small operating company that maybe hasn't broke off, or they have a short-term investment that they're just managing the operating side of that. We do see dynamic allocations can help automate some expense and income sharing that may come up with the managing operational entities within your family office structure. And as Keith said, it is a very powerful tool. So you can layer things upon each of their calculations. And so in Keith's case, he's using it for family offices, and it is valuable there where you have layered ownership structures and you're taking this percentage and then at that next level, taking that and then doing an allocation off of that result. So you do have the ability to do that within that solution. An alternative we have seen and that we've developed internally here is really purpose-built for partial ownership and tiered entity structures. It's Sage Intacct's advanced ownership consolidations tool. It gives you the ability to build your organizational structures within Sage Intacct with your percentage of ownerships, allowing you to post the equity method of consolidation and equity transactions as well as non-controlling interest eliminations when needed. Obviously, it can do 100% ownership consolidations as well, but it will do it all within the system and the calculations that it sees from each entity's financial statement. You get to define what the accounts are that you want to populate for investment in subsidiary and subsidiary income and so on and so forth. So we do have that in the tool that you can basically hit a button that says consolidate structure, and it can go through that entire org chart and automate any of the journal entries and transactions that need to happen so that you have accurate consolidated statements for each family member or each parent entity.
Kelly, thanks for sharing that. I think that this topic and these options with Sage Intacct are one of the hottest topics in the family office space. It's one that we could probably spend an entire hour on in and of itself, and also spend a lot of time on when we're at the conferences with each other, all kind of socializing as a family office industry at the Sage Intacct conferences. So we've talked a lot about how you're structured in Sage Intacct with your entities, your dimensions. We've talked about the investment reporting a little bit. What other reports or dashboards or KPIs do you rely on most out of Sage Intacct for visibility into your financials? Kristen, I'll start with you on this one.
Yeah, we actually heavily rely on dashboards. At first, I didn't think we'd use them as much as we do, but they are something that the accounting team finds very useful. Our CEO, he actually logs into Sage and looks at the different dashboards. I've also created our CEO a profits interest dashboard with several of the components that go into the calculation. Previously, that was all done in Excel, and it was a very manual process pulling data out of the financial reports. And now our CEO is able to log in and just pull the data right off that dashboard. For the accounting team, we heavily rely on investment dashboards. This is easy for us to tie to capital statements. We have a fair market value report that we have created. It's by entity, by month, and by position. So we can tie back to our capital statements. I think this is actually one cross-country created for us during implementation. So it's one we're still using. In the way of month-end reporting, our most common reports, I would say, are a budget to actual, a comparative balance sheet and income statement, a historical P&L. This is very useful for us to see the trends and any anomalies from month to month. And we also run kind of like our actual and then like a forward-looking projection based off our budget as well. So those are the most common reports that we are using right now.
Right. And Keith, what about you?
So for us on our dashboards, we do a lot of intercompany. So that process, through other systems has been very tedious. And with Sage, we found that process has been simplified because once you get into these intercompany modules, once you make an entry on the receivable side and you identify the location of the payer, it automatically posts to the other side for you. So it's not the fact that you just have a single login to get to these locations. It will actually allow you that when you're posting on one side, it automatically will post the offset to the other intercompany. So it has saved a tremendous amount. So we've got dashboards to help us keep that reconciled. We're able to reconcile those accounts a lot more often. Being a single family office for that many entities, we have a lot of ASA agreements that the family office absorbs fees for, and it gives us the opportunity to make sure that once we see balances accumulating, or we know we do our cash management piece, where we are in that process. From the CEO has access to it. We've got a couple of dashboards set up for him on the family office side, just so we can see some of the expenses, just making sure that we're staying where our budget is. The budget to actual module that Kristen mentioned is amazing, because for us, all of our G2s, which are the kids, they all have a budget that we prepare each year. So every month when we close, we can do a comparison of the actual versus budget, and then see where we're off, or where we're either plus or minus on the budget numbers, so that when we're communicating that to the trustees and it's time to do a distribution or something like that, we know where everything stands, and it's more real time for us, where before it could be 4 or 6 months down the road. So now we're able to do this monthly very easily through the system, and so it has really made a difference. We are actually having our end of year meetings this month, and what we're doing now is for the trustees, we're rolling out the dashboards to the trustees and to the G2. So we have meetings already set up. We've already got some dashboards prepared. We'll modify as necessary, see what kind of information they may want to see in addition to what we set up as a standard dashboard. But we're excited, and from the Adapar side, obviously we've got investment dashboards set up where we can see where we are as far as the allocations go against our target allocations, what asset classes we have. We compare our custodians' performance against each other, and so those are dashboards that we're also rolling out this month to the G2s as well. So we've got a lot of work, some work to do before year end, but it's exciting because now we're actually able to give everyone information that we've been wanting to give them for a long time.
We'll have to get the update from you on how those are received at the end of this month or beginning of the year. We've talked before also about how this reporting that you guys are using out of Sage Intacct is helping you with your external advisors and services partners that you're working with. Can each of you speak a little bit to that?
Yeah, absolutely. I can go ahead and start. So the reports that we generate out of Sage Intacct are exactly like what we use in our quarterly board reporting to the family. So the quality of the conversations with our family members is definitely improved. We've been able to customize all of the reports to match what the family's preferences are because Sage is so, as Kelly mentioned, it's very customizable. We're able to get exactly what we want out of Sage into those board reports. And our family, they've observed how our financial reporting has improved since we've implemented Intacct. So our family feels a lot more confident now, and they trust, that our financial reporting is pretty accurate, or is accurate, not pretty accurate, but it is accurate. We do get audited every year. So our auditors want to see reports out of our GL system. I mentioned we use Adapar, and we use Adapar a lot for our investment software or for our investment reporting. But since our auditors want to see that data out of the GL system, I'm able to produce reports for our auditors. For example, I have to do an investment roll forward every year for our investments for our audit. So I can, because of the way we use dimensions and the way we're set up, I'm able to tag all the transactions, whether it's, contribution, distribution, whether it's earnings and whatnot. So I'm able to get that report out of Sage Intacct. Also, I mentioned that fair market value report. That's something we provide our auditors. They use that fair market value report to tie back to our capital statements, and then again, tie that to our investment roll forward and our balance sheet. So the reporting capabilities out of there have really helped us out a lot, especially with our audit.
And Keith, you do not get audited, but I believe you're still leveraging and have seen some other improvements recently for external parties.
We have. So, with everything we had going on in 23 and 24, with the, lack of confidence that we were getting out of the systems, and then we went to, Sage at the beginning of this year, the trustees had asked that, we bring in an outside third party. It's actually going to be our new tax provider or tax compliance firm to just come in and take some of our bigger investment portfolio entities, do a review of what they see for 24, and then compare that to what we're doing in 25. Just as it's not an audit, really is not even a reviewed financial. It was just taking our processes and taking the information that we provided and be able to tie back to what was showing in the systems. We rely a lot on, obviously, custodian statements at the end of the month and at the end of the year. And so to give them access to that, take the information that came out of these two systems. And what we found was, not surprising for me, was for 24, I was handing off general ledgers and trial balances that could be, 70, 80, 90,000 line items exported, and, having them go through and try to tie out account balances to what we're showing on the statements. When they got to 25, and with the processes that we had, those reconciliations were cut down so much that, it was actually noted in the reports that they were able to tie out 24, but it was a lot more work. And if you're a third party coming in, you don't know, you don't know the operations, you don't know the family, you don't know how they invest, it's very cumbersome. So when we got to 25, we were able to do the same things, and they were able to just pick that up, see a balance. We have our customized reports that we do that were built out by cross country, and we break it out by custodian. So it was very easy on our balance sheets to see, okay, here's what we're showing for the investments, here's what we're showing as the cash component of the investment accounts. They were able to tick and tie that out, and they made a notable difference in our performance for 25 compared to 24, which was very encouraging. And that was through June of this year. So we were on it 6 months, and we're already getting a lot of positive feedback from third-party tax providers.
That's great. And Kelly, what about for family offices that don't have as mature or as robust of an investment management software like Adapar in their tech stack to be feeding that level of data into Intacct for the reporting out of it? What do you see there?
Yeah, and it actually happens quite frequently. And I think a lot, again, around the change management, sometimes companies will say, yeah, we've looked at Adapart, we're not ready for that today. But we do know that we need to replace QuickBooks. And so there is definitely a big need to get an accounting GL system in, even if you're not ready for that investment type system. And so even without that dedicated investment system like the Adapars and the Masters of the world, Sage Intacct does allow you to bring in data from external places. And so sometimes we'll see family offices who look at their custodian statement and they do a journal entry. They manually key a journal entry in. Same way they might be doing it in QuickBooks today, kind of keeping that process and allowing them to have that same process that they had just in a new system. Some people want to bring in additional detail and use dimensions like custodian account or fair market value adjustments and cost basis in some of those reportings. And so they might want to take that broker statement in Excel, massage it a little bit, and bring it in as a journal entry via CSV import. And so that is something we quite commonly see, is being able to meet people wherever they are and not needing to necessarily have that Adapar system in place day one.
Yeah, and it goes without saying that a lot of that flexibility in Intacct still then allows them to track their lifestyle assets or their personal spend or their philanthropy activity, some of that kind of non-investment activity that's still really critical to the overall reporting and analytics that they need to be able to get to the bottom of. So as we keep going here, the last topic that I want to discuss today before we open the floor to questions is around any other systems. We've spent a lot of time obviously talking about the investment side, but there's other systems in your tech stack as well. So Kristen, I'll start with you. What other systems are you using for something like bill pay or banking or payroll? And have you integrated those in with Intacct to be receiving any kind of benefits from that automation and that full technology stack?
So we use bill.com for our spend and expense and our accounts payable. We have bill.com integrated with Sage Intacct, so that's a nice seamless feed right there. We do use ADP for payroll, but we currently are not integrated. That might be something we look at in the future, but right now our payroll isn't too complicated. I know we've talked a lot about the investment, but we do use Arch. We just implemented Arch as well. Went live last week with Arch. So we have Arch integrated with Adapar, which is then integrated with Sage Intacct as well. So that is our current tech stack right now. We've definitely evolved over the last 3 years, and I'm ready to stop implementations and now to focus on improving those and optimizing each of those systems is, what we're looking forward to doing.
I can appreciate that fatigue there. Keith, what about you?
So for our office, we use a lot. We have a lot of again with these intercompanies and the AP process. So we actually took advantage of the AP automation functionality in Sage. So we can actually take a bill that we receive either via email or through directly to our AP folder email that we have set up, and we can actually upload that directly into Sage. And with the machine learning aspect of Sage, once you put that invoice in a couple times, if you have a recurring invoice for a utility bill, and you've got the same provider every month, different amount, same provider, it will learn by location and the vendor, and it will post there to where all you really have to do is it'll upload the amounts, but it'll code it to the right account, to the right vendor. And you obviously you want to check it, but as you do it more and more often, and we're now 11, 12 months into this, we're seeing how accurate that functionality is. And so now what we're looking at is we're implementing SharePoint, and that's kind of been a year-long process. That kind of got started when we were implementing Sage and Adapar. And luckily, I'm not running that particular implementation. Our chief operating officer is. And I know she'll be glad when we get that live, and we're trying to go live on January 1. So right now, our next step is to find the connection between SharePoint and Sage to where we can put the billings into SharePoint, and it will integrate into Sage to where we're not having to upload 2 invoices to 2 different systems. We can upload it once and it goes to both systems. So really excited about that. So we're working with Cross Country right now on what is the best solution for us to do that with. So we're excited about that. That'll also save some time. We found that we were doing closings in 45 days, typically 45 to 60. And more on the 60-day side. And now we're down to like 30 days. And part of that is because we are doing a manual process on the reconciliation for the investments. We don't get our statements till around the 12th through the 15th of the month. So it's a pretty robust system. A lot of this was still being manual from the QuickBooks side, but we've got a pretty robust system. And, one of the next steps we'll do is we are going to look at Knowledger as well. Just didn't want to throw too much at the team all at once. We wanted to get settled in, take a deep breath, figure out where we were. And now that we look back, we know where we are. So we're excited about next steps for us.
Great. The Knowledge team may be out there listening to this year, so I'm sure that they'll be excited to know that you're going to be getting your eyes back towards that automation there. Kelly, to wrap up this section, what else do you hear in conversations with family offices around their phased approach to tech stack or their evolving tech stack? And what are your thoughts on how Sage Intacct continues to kind of come out ahead of the curve of being the right fit and kind of deepening the expertise that's in Sage Intacct natively?
Yeah. So it's really interesting you say that, because when I talk to family offices, sometimes they'll say, well, I don't think we need any integrations, because they just don't know integrations kind of exist in their QuickBooks world. Everything is more manual. And so having a banking integration is now pretty expected, like being able to connect to the bank accounts and the operating accounts first, seamless reconciliations is something that we can offer. Having the AP automation that Keith's using. And I took some notes about your feedback on that, because I do get, questions around, as you're using it for some amount of time, how is this going to make us more efficient? And so I'll be able to kind of leverage the comments that you've made. We also have things like payment automation, so getting the payments out the door for you as well. But I think the important thing here is to remember that, again, to the point that we've made so many times today, the change management is really where we want to dive into. Sage Intacct is flexible enough. It can connect to any system. It's an open to business API system. So, if you need to connect to a proprietary a software you've built for one of your operating companies, we could build an integration for that. However, you probably might be using something like Kristen and ADP, and you want to use that tool. Does it need to be integrated or not? Let's kind of decide what those pieces are and the priorities, and make sure that you have the Sage Intacct system that is flexible enough to connect them when you're ready to connect them, but also providing you, the financial reporting that you need, no matter how the data is coming in.
Perfect. Well, this wraps up our moderated part of the conversation today. We would love to hear from those on the line. So if you haven't already, please feel free to drop any questions that you have for our panelists into the Q&A function. I'm going to pause here and give folks a minute to type any other questions in. And then while you're typing, a couple other reminders from our cross-country team. If you are already on Sage Intacct, Would love to remind you that after each Sage Intacct release, which is 4 times a year, Cross Country does host a webinar to highlight that functionality included in the release. It oftentimes helps jumpstart your internal conversations on which new items are relevant for your team. We oftentimes catch companies who aren't on Intacct taking a peek into that because we get a lot of questions during the evaluation process of Intacct on how releases are rolled out. And then if you're listening in and evaluating a move to Sage Intacct, would love to connect with you one-on-one and help map out what that might look like for you. Everyone on the call today will be receiving a follow-up email, so you'll have highlights from today's discussion, a link to the Release 4 demo that we recently hosted, and contact information for our team. So with that, let us check the Q&A. I think we have a few questions in here. Okay, what features does Intacct have specifically for members capital? I think we covered a little bit of how we solve for this from a dynamic allocations standpoint. Kelly, do you have anything to add to that one?
No, I think just the power of the dimensions and being able to use those dimensions and filter them. And as Keith mentioned, having those tiered structures where I need to take, entities and investments into a holding company and then allocate that percentage out to the partner is really how we can solve and kind of keep some streamline efficiency there around members capital.
We have a question about have we been able to develop any automated statements of cash flow, both direct or indirect? I'm happy to answer that from the Cross Country or Sage side, but Keith and Kristen, are either one of you using a statement of cash flow?
I do, but I create that myself. I know we have a cash flow report that I believe Cross Country assisted with, but I'm not currently using that. Just to get it in the format that we need. It's probably something we can circle back on, especially definitely, and improve that report and help me save some time when it comes to month-end reporting.
Keith, what about you on cash flow?
Yeah, from the cash report side again, we wanted to get a very customized, robust balance sheet and income statement the way we wanted to present. And so we've not really looked at the cash flow report. We have our own cash reporting. We do utilize a lot in the cash management side of Sage to help create our cash reports that we do on a weekly basis. But again, that's something we will circle back on, going forward, because again, we just had so much trying to get in place that we've been focused on that. But we know there's a lot more use cases out there in the system that we want to take a look at.
Yeah. Yep. And it is a report writing configuration. So I will say that most of our family offices, the out-of-the-box cash flow reports don't necessarily fit the presentation style and the exact kind of the column headings and rows that they want to see. So we do spend a lot of time with our customers working on designing that out and then building it and testing it either during the implementation sometimes, but a lot of times it is one of those let's circle back to that after we're a little bit more stable and focus on that report because it can get more complex. There's a question here. Are Keith's ownership percentages static? Could the same dynamic allocation groups be used for ownership percentages that are often changing?
Absolutely. Definitely. We have, some of our investment portfolio companies, we may have an investment portfolio company that's owned 70% by another entity. We may do something internally where we change that percentage. We allocate more or less of an interest in that to a different generation that may be ultimately the top tier owner. So when we do that, it's just a matter of changing the statistical account to the new percentages, because what the allocations are going to flow from is when you close, it knows what month you're closing in. So if you've closing this during December and you've made a change, when you close December, it's going to be for December. Everything else will the allocation will redo itself for everything that happened previously. So that was one of the tough areas in this allocation, doing it manually. And so we found that, we worked well enough with the cross country team that they understood that. So we were able to get that implemented and, flowing the way it should.
We have another question more around cash flows and asking, are your books set up as cash accrual or cash and accrual in Sage Intacct?
We are accrual. Because we're audited, we just thought it'd be easier to keep them on GAAP.
Same here. We're on the accrual. Most of our tax returns are on cash basis. Yeah, the one thing, with QuickBooks, you have the toggle switch, right, to go to cash to accrual. This one we elected to be accrual because we do want to report the payables because we do have so many intercompanies, and we do have a lot of note receivables and tax receivables and tax payables and things that we want to keep track of. So we elected, to go with the accrual basis on that.
Quick question on what system you use for document management for legal docs or tax docs.
We just implemented Arch, so that'll be our document management system for the tax documents. Legal documents, that's still just on SharePoint. But Arch does bring in like investor communications and subdocs and all of that type of stuff as well. So
Yep.
we're using Arch.
And
Great.
up until we're implementing SharePoint, we have been in DocuWare, and everything has been, all of our tax returns, all of our legal anything from an insurance standpoint, a tax standpoint, any relevant documents that we want to keep has been in DocuWare. But the SharePoint that we're implementing, it's been a pretty robust process there as well, because now we're actually defining the metadata that we want to be able to search by and make it a whole lot easier for us to put these documents in and be able to just search. Because if you're familiar with DocuWare, you've got to be pretty specific in your search field to see if a document pulls up. And the way we're setting up SharePoint is, it's a metadata issue, and we're making sure that we've got it to where it's as simple as possible to search for documents.
Yep. There is a question here about the general time frame for onboarding process to Sage Intacct and number of users. So from my perspective, we actually have some family offices going live in as short as 3 months, many of which in more of like the 5 to 6 month time frame. I think a lot of that depends on the current state of your accounting function, and also how many initiatives you're taking on as a part of this transformation. As Krista mentioned, and Keith too, they both implemented at the same time. And there was a lot of conversation on how much can you take on, how fast do we need to go, how are those project plans kind of overlapping and integrating with each other so that both implementations are meeting the milestones that they need to and getting that foundational data defined before kind of moving into that build and testing phase. As far as users, we see as few as 1 to 2 users in our family offices. We see as many, we have single family offices with over 70 business users, depending on how they're really organized for their size of family office and business structure. So no amount of users is too small. And then it really becomes a matter of discussing your roles and permissions and your business processes to make sure that you're defining those controls that you need. I know we're right at time. There were a couple of questions that we're happy from the cross-country side to follow up on. I know that our panelists, Kelly, Kristen, and Keith, are all very happy to help contribute to some specific questions. So from the cross-country perspective, we can continue to review the questions that we weren't able to cover today. But on behalf of cross-country and all of our panelists, we really want to thank you for spending an hour of your day with us and providing such great engagement and questions to us. And thank you very much to our panelists for participating and bringing all of your experience and knowledge to the conversation. Thank you, everyone.